In this session, we are going to understand the difference between corporate lending and retail lending. In corporate lending, what happens is credit is provided to business entities. It can be for their manufacturing purposes, trade purposes, but it is purely for business. And when I say corporate credit, I do not mean exclusively for companies. Okay, so here the focus is on business entities. Whereas retail loan, they are basically given to individuals in their personal capacity. This will basically enhance their ability to spend. So they'll take loan for their personal purposes, for consumption purposes, or for acquiring assets and all. Okay, so if you look at it, it is given for consumption purposes or for acquiring personal assets. But corporate loan, they are generally given for commercial purposes. So it will be put into business, and with that they'll enhance their scale of production. There will be increase in volume of trade, and as a result there will be increase in profits as well. So that's how a corporate lending is looked at. And if you look at it from viability angle, as far as the corporate loans are concerned, the viability is decided by looking at the cash flow that is going to be generated from the assets what they have funded. Okay, so bank is going to fund the entity for acquiring some asset. It can be current assets, it can be fixed assets, so we call it as commercial assets. So these assets are going to be put into use in the business that will generate income, that will generate profit. So the viability testing will be whether those cash flows are adequate to repay the loan or not. But in case of retail lending, the loan is provided based on the income of the borrower. So the bank will look at whether that income over a period of time will be sufficient enough to take care of the loan repayment. Okay, so look, the viability angle, corporate or corporate lending, it's the cash flow generated from the assets, whereas retail, it is the income of the borrower over a period of time. So basically borrower will be repaying the loan from his personal income, let's say salary, whereas in case of corporate lending, borrower have to repay the loan out of the profits that are earned through the business. Yeah, the differences continues. Let's see some more. In corporate lending, the working life of assets that are created are more important because they're basically funding the acquisition of current assets, fixed assets. So working life of those assets are considered as more important. Actually, we call them as primary security. Whereas in retail lending, it is the working life of the borrower that is more important. That's why in retail lending, insurance of the borrower life is insisted, whereas in corporate lending, insurance of assets that are created out of those loans are insisted. And these corporate lending loans, they'll be very big ticket loans, generally given to corporates, so they're also called as wholesale loan. Whereas if you take retail lending, there will be large number of loan accounts. They'll be really large in numbers. But if you look at the loan size, it will be smaller, and as a result, turnaround time, TAT for those loan processing will also be very small. And if you look at the lending decision process, basically they'll have a standardized appraisal criteria. Okay, so it is more attribute based, so they follow the structure. Whereas in corporate lending, it is largely based on analysis of financial statements, and of course other factors plays very important role, but it is largely based on analysis of financial statements, and that's why financial analysis becomes or is considered as one of the important skill.